Welcome to the MUFG Global Markets Podcast. I'm John Cook, and I'm joined today by Takahiro Sekido, Chief Japan Strategist for MUFG. It's Monday, October 4th, 2021. Welcome back to the podcast, Sekido-san.
Good to be back.
Always good to have you. So let's get right into it. So the Japanese political winds continue to blow rather forcefully, in my view. Unpopular Prime Minister Suga recently stepped down. I was wondering if you could bring our listeners up to speed on the results of the LDP leadership race, the new Prime Minister, as well as the upcoming election. And I'd also be curious any implications for markets.
Okay. Fumio Kishida was declared the winner of Japan's Liberal Democratic Party LDP leadership race on September 29th. Kishida has spoken of new economic measures totaling tens of trillions of yen during the LDP leadership race. We think near-term yen rates and basis catalyst could be firstly, JGB issuances, debt duration could be expanded, and JGB issuance plans could be revised depending on the scale of new economic measures. Secondly, fiscal spending. We think that the economic effects could depend on the pace of fiscal spending, with spending no longer limited to single fiscal years and unspent amounts remaining from past budgets. Thirdly, BOJ monetary policy. Investors should watch if BOJ's JGB purchases change in tandem with MOF's fiscal management. Reportedly, the campaigning for the lower house elections will begin on October 19th, with voting to be held on October 31st. The Tokyo First Party launching a national party may be the reason why the lower house elections will be held earlier than initially expected. An extraordinary diet session was opened on October 4th, and Fumio Kishida was named the 100th Prime Minister of Japan. The extraordinary diet session will be short, without much time for in-depth policy debate. The shock of ruling party candidates performing so poorly in July's Tokyo Assembly elections is still fresh. Going forward, predictions about and bargaining with ruling and opposition parties will pick up considerably. The risk of ballooning fiscal spending has increased, but there isn't a lot of time for the Nikkei Average to rise as markets digest the scale of the budget and potential for spending. We think that speculations about expanded fiscal spending are premature and maintain our view for an upward bias for yen rates and a widened bias for yen basis. We'll be watching out for any new developments of policy stances that could push the Nikkei average or down and higher, given the lack of clarity about structural reforms after the lower house elections.
Okay, so plenty of developments there, but I do take your point that speculation about additional fiscal spending might be premature at this juncture. During all this, all these political developments, there's some other things going on that I'd like to kind of recircle back to. So, as example, the Bank of Japan recently released the quarterly Tankan survey of Japanese businesses. As many of our listeners know, this is key information for market participants. Could you take us through the key takeaways?
Okay. The BOJ's September Tankan survey showed that the actual business condition DI among the large manufacturers at 18 points, up 4 points from June, with future DI at 14 points, down minus 4 points. The DIs of minus 7 points among automakers, down minus 10 points from June because of the shortage of automotive parts stood out. Exporters expect an FX rate of down yen 106.59 and the euro yen 125.60 for second half, with the assumption down rate of the actual market rate by 5 yen. Japanese exporters are close to hitting their record pace of 80 trillion yen per year, and the upper end of down yen as US dollar rallies is expected to weigh on Japanese exports. Large companies across all industries expect to make more capex by 10.1% year over year. The overseas business exchange rate for fiscal year 21 across all industries are dollar yen 106.87 and euro yen 126.30. We think that Japanese outward investing and yen selling flows are likely to pick up, nearing those dollar yen and euro yen levels.
Okay, so certainly good news there, but definitely not universally positive, and a couple of headwinds, whether it be electronic parts for the auto manufacturers or otherwise. But let's switch topics and go a little bit more forward looking. I'm curious what our listeners should be watching for during the month of October.
Yen rates followed US rates upward in late September. Redemptions of JGBs were concentrated on September 20th and 21st, and a sense of cash abundance grew in the market at that time. However, JGB rates moved in reaction to the US rate rise. Japanese investors acquired a net 1.3 trillion yen of foreign bonds on September 12th to 25th, including a net 1.1 trillion yen of medium to long-term bonds. Overseas investors unloaded a net 4 trillion yen of Japanese securities. They unloaded a substantial amount of medium to long-term bonds by 2.1 trillion yen. Overseas investors' redemptions and selling falls may have caused JGB sold off rather than Japanese investors rebalancing from JGB redemptions to foreign bonds buying. We should be watching the preference for JGBs and yen basis among overseas investors and the dollar-yen correlation going forward.
That's interesting. I mean, as you point out, the large amount of selling of overseas investors, is pretty versus buying of Japanese investors overseas. Pretty significant moves there. And I would point out that that's a real reversal in the trend. That we've seen so far in the fiscal year. Up to this point, overseas investors have been huge buyers of JGBs, and Japanese investors have been relatively tepid buyers of foreign bonds. So it's interesting to see that reversal there, and also interesting. They think the overseas investor selling of JGBs was more impactful on the JGB market. Very, very interesting there. Why don't we wrap things up? Let's just hit your outlooks, specifically yen rate, spot dollar yen, and yen basis.
US dollar has rallied and the dollar yen is up. But there are still questions about Chinese real estate developer Evergrande making its US dollar coupon payments. Yen has not weakened significantly amongst G10 currencies and is not necessarily on a weakening trend. Dollar yen has risen to the 112 level and it could keep on rising. Typically, demand for US dollar funds for the year end comes down. We expect dollar yen to trade in a 2.5 yen range, 110.50 to 113, and maintain a neutral bias. The yen swap rate curve has risen and steepened. The China Evergrande debt issue continues to fester amidst an abundance of yen funds after JGB redemption in September. Yen swap rates could rise as underlying demand grows because of the fiscal risk if the new government focuses on fiscal spending. Recent JGB market pricing trend will continue, and we expect yen swap rates to have an upward bias for the time being. In October, yen cross-currency asset positions will likely move. We expect Japanese investors to move their bond positions as US rates go up. Dow yen rise, 3-month Dow yen forward discount widens, and as JGBs are redeemed. MOF's weekly data shows that Japanese acquired a net 440 billion yen of medium to long-term foreign bonds and a net 126 billion yen of foreign stocks and investment fund holdings between September 19th to 25th. Japanese have acquired a net 3.9 trillion yen over the past 4 weeks. We expect these trends will continue into second half. Moreover, Japanese companies could make more active overseas direct investing. We expect a widening bias for yen basis at the beginning of the second half.
Okay, so interesting to see that you think that buying of foreign bonds continues, not to mention the increase in FDI. So to summarize things, you're neutral on dollar yen, you have an upward bias for yen rate and a widening bias for cross currency. Great stuff as always, Sekido-san. Thank you so much for joining us.
Thanks for having me, John, always.
Thank you for listening to the MUFG Global Markets Podcast. Rate, review, and subscribe on Apple, Spotify, or wherever you get your podcasts. And reach out to your MUFG sales rep for any further information. Check back soon for more insights from the Global Markets Research Team.